Ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome to this video. Guys, as you saw from the title of this video, we're going to be talking about the most important aspect when it comes to trading psychology, okay? Now, it can be or seem a very, very open-ended question, and it is in a sense, but I think from the journey I have had so far, I will actually explain a few key points that can be very, very important or are very, very important when it comes to trading psychology and things that can actually genuinely help you in your trading, okay? So when it comes to trading psychology, again, it is 90% of the game. It is about managing emotions, we can say that. But there are a few key points that I do want to highlight. Now, number one is that, I want to start this from being a beginner to actually gaining more experience in the trading game, okay? So if you're a beginner, one of the key or typical things that you do here is that people are blowing accounts, right? So that, of course, comes down to risk management and the kind of emotional aspect of greed, okay? It's understanding, oh my God, I can actually push a button on MT4, MT5, C-Trader, whatever it is, and actually be able to see a trade either go into profit or loss. Typically, as you guys can often hear, it goes into loss to the extent where they don't even have a stop loss and it blows accounts or blows substantial proportion of the account, right? So one of the key aspects, especially when you're a beginner, is to understand that risk management is key. So we're talking about just risking a small percent of the account. I mean, that's the game. If you can risk about 1% or less than 1% of the account per trade, then you know that you can compound that account. So if you're able to grow that account by 5% or 10% or 20% a month, just through your consistent work of trading in the month, that is tremendous, okay? And that is something to understand. So it's not about how much to risk at the early stage. It's number one, understanding, okay, we risk a small percent, but it's where you risk it is very important. Because again, like I say, you can actually have a varying strike rate strategies. You can have strategies that have a low strike rate, 20%, or a high strike rate, such as 80%. But it all depends on the trader. But like I say, for now, when it comes to being a beginner and thinking of trading psychology, it's very, very important to understand that, hey, you don't want to be in this game just to start off by trading or risking a huge amount just for the potential of gaining a huge amount. It is not like that. The professional traders, of course, like you say, I'm sure you understand, they of course do gain a substantial amount of money over time. It's a skill, but they've understood at least at some point in time in their journey that risk is absolutely crucial, because you want to live at least for another day. If you have a bad day or a bad week or a bad month, you still want a substantial proportion of your account still intact to allow you to recoup, to understand where you went wrong, and of course to trade for the next month, okay? So like I said, for a beginner, risk management is crucial. Please make sure that you are risking a very small proportion of your account, okay? That is number one. Now, once you've got the risk management understood and you've actually executing a trade of any strategy just of 1% or a small risk, or for example, 0.5%, then you've understood that, okay, well, I can compound this account. So that's all good and well. You've got the risk management there under lock, okay? Now, when it comes to the strategy side, of course, you guys out there are going to want to find a strategy, something that works. Is to understand that there are so many different strategies and so many different ways to trade this market. And I'd say just to start with one strategy or find a community to have that one strategy and get comfortable with it and see if you enjoy it or not. Now, the reason why I say this is because there are strategies out there, which I'm sure you guys have seen, that have a low strike rate, 20% or 10%, for example, that have a very, very high risk to reward, such as 20%, 30%, whatever it may be. Now, this can be uncomfortable for a lot of individuals out there. Again, it depends on your lifestyle. It depends how you think. It depends on if you believe that it's okay and you can trust your edge very well. Again, having a low strike rate strategy does have its pros and cons, okay? Maybe perhaps, for example, you do trust the edge very, very well. So again, you're happy to execute and take a lot of losses with it. But some people, especially at the early stages, may not be okay with that. So maybe, especially at the beginning point, and this is actually a very, very important point to highlight for beginners, is to understand that, hey, genuinely put effort in the charts and find a strategy that will work out most of the time. So try and find something that does have a high win rate and really strive for that. Yes, of course, it does take work, but at the same time, you will protect your psychology to the point where, for example, if worst happens, you take 8 losses, for example, and you're 8% down on an account and you're in drawdown, then you're not thinking, okay, well, let me risk more than what I'm risking. Let me risk more so that I have the potential of more reward. Again, that compromises the very first point I made, which is risk management. So like I say, you can explore different strategies, but understanding that, okay, well, once you take a strategy and you backtest it, see if it does match what you like. Are you enjoying it? If yes, then continue. If not, and you're finding your psychological troubles with it in the sense that you don't like either taking a lot of losses before that high win, or if the opposite end, if you have a high win rate strategy and you're not taking that much R or that much percentage of the markets every month, but you believe you can take more, adjust the strategy or change the strategy. Again, it doesn't have to be, okay, this is one strategy I use forever. If you're not comfortable doing it, again, either refine your edge or change the strategy. Yes, that might be against what some people say when it comes to changing strategy, but again, it is about finding what really works for you. Some people do have different risk appetites. So again, like I say, analyze the strategy and consider what the edge is, and consider if you're okay with handling potential drawdowns or potential losses in a given time frame. Okay, so I know, for example, I'm sure just off the top of my head, I can imagine scalpers taking a lot of trades a day, so I can imagine sometimes they will be taking a lot of losses consecutively, possibly. But again, that will also need experience in terms of how to manage that and how to deal with that number of losses. Okay, so like I said, fundamental level, beginner level is risk management. At least after that, it will come strategy. Understand the strategy, see if it matches with you. And this is the thing, like I say, like this is also experience based. Your trading psychology develops as you gain more experience. You're more comfortable with taking losses, you're more comfortable with risking a certain amount, you're more comfortable with risking funding on your personal account than funded accounts, for example, or vice versa. It all depends on the individual, genuinely. But like I say, when it comes to trading psychology and that part, then strategy is very, very key. Now, I think when it comes to the longer run, okay, so say for example, you've got a strategy that you enjoy, you've got risk management on lock, and you're just trading it. Now, sometimes traders can get very, very bored of their strategy, okay? And they do want to change and mix things up. Now, at this point in time, of course, you're more than happy to do that. Why not, right? Try and find an edge, try and have that, as we call it, a 1% improvement to actually refine that edge better and better. There's nothing wrong with that. But at the same time, one of the things that you do want to understand is make sure you put the work in for that, right? If you're going to refine the edge, make sure the work is put in for that and that you can handle or do have a process in place between trading your old strategy till trading the new strategy with the refined edge. Okay, it's understanding that, hey, you may get bored because you're trading the same thing over and over again. If you want to refine the strategy, then have a set process with doing it. Don't just refine it and just be like, okay, let's go and trade it, back test it, forward test it, do whatever you need to do to ensure that that strategy is ready to go. Okay, but also one of the key points is that when it comes to that kind of level of, okay, I'm trading profitably, what happens next? What do I do? Now, sometimes you can actually experience burnouts, okay? And I do see traders actually feeling this as well. And it's not even just through trading, it can be through other ventures. But sometimes, you might be one of those individuals or one of those traders that are genuinely and focused so strongly on back testing, forward testing, collecting data, getting better and better. And trading profitably is that you can also experience burnout. So it's important to understand that, hey, take the time out too. And I'm sure seasoned traders will understand this, but also having a balance of just relaxing at the same time or making time to relax and spending time at the charts and trading, okay? Again, that's more of that experienced kind of level of trading, and you will start to understand that. So like I say, when it comes to discussing the most important aspect of trading psychology, I guess, I've highlighted a few key points, but in the sense that the whole game is psychology and it's all about managing emotions, right? But at the fundamental level, it's about putting in processes that protect you, okay? And that might sound like a little bit of a strange thing, but it's basically to say that, okay, well, the majority of people come into this game risking a lot in order to gain a lot is down to greed, ego, and other emotions. But the people that make it successful are the people that have a plan, right? They have a plan in place. They're planners, but they're also people that will actually genuinely put in that work with the charts. So, I do definitely hope you guys, anyone that's being or considering being a trader or is a serious trader, is, like I say, balance. It's not only important about balance, but also understanding that, hey, genuinely put in the work. And a lot of it does come down to experience. I've been in those kind of stages where you do have a lot of losses. I've been in those stages where you change strategies. I've been in these stages where you think, okay, well, is it for me? You question yourself, right? Sometimes. But again, you will also hit all these milestones, or not milestones, but also kind of all these little hurdles. But it's important just to keep going. That's the whole thing. That's why it's a psychological game, because it also plays on such a big thing, which is money for us, right? Because money, no one likes losing money in particular. So of course it can play on that. But at the end of the day, just with all things, just with all businesses, it does take time. It does require perseverance, but most importantly, once you get, as you get the experience, you also need to make sure the correct processes are in place to help protect your psyche, help protect your psychology, so that you are feeling, hey, refreshed and ready to go and ready to trade in the day. Okay, so there you have it, guys. I do genuinely hope that this video resonates with you. When it comes to trading psychology, it's not just one aspect. For example, if I just said risk management is the most important thing, there are a bunch of different things, because even if you manage your risk, doesn't mean that you get out profitable, because your strategy may lack the edge. You know, even when it comes to execution, you might have a little iffy thing there. You may not be executing as well as you can. But, you know, as long as you're reviewing the trades and journaling, and like I say, planning and keep creating processes or ensuring your processes are in check, then over time, number one, you'll have experience with it. Number two, you'll get in that habit of creating very, very good processes. And at the end of the day, that's just got to help your results, right? So guys, feel free to let me know if you in particular have something in your mind or have experienced something that you feel is very, very important, if not the most important thing for you when it comes to trading psychology. Guys, feel free to let me know down in the comment section below. And also let me know that if there has been any real strong hurdles that you've had to come across or overcome to actually help your trading advance to the next level, then guys, I definitely want to hear it. So guys, please feel free to write it down in the comment section below. But genuinely, for now, I hope you all have a fantastic trading week, and I'll speak to you guys soon. Peace.